The world's largest internet company is getting ready to release earnings after the closing bell today. Joining us now to preview Google's results is Scott Kessler, analyst at S&P Capital IQ. Scott, great to speak with you today.
Thanks a lot, Morgan. Good to be with you.
So I was looking at your research note. It says you expect to see improvement in revenue growth in 2015 as well as 2016. What's going to drive that growth? How much? And how worried should we be about a currency impact?
So I guess starting with your last question first, there's no question that currency is going to be a major issue for Google and frankly a number of internet and technology companies with international exposure. Google derives more than half of its revenues from overseas, so that definitely is something to watch. In addition, we think Google is going to benefit due to the sale of Motorola Mobility and the related assets and operations, and we think more favorable trends when it comes to mobile, both search and advertising.
And certainly Ruth Porat will be in focus because it's her first quarter acting as Google's chief financial officer. What do you hope that she focuses on during the conference call? Is there anything that you want her to turn around at Google? I mean, we've certainly seen some reports recently of increasing cost discipline at the company since she's taken over. What are your thoughts?
Yeah, I think three things come to mind with respect to Ruth Porat. She joined really within the last month and a half. This is going to be her first quarterly conference call. I think number one, we want to see, as you indicated, more discipline when it comes to costs, expenses, capital expenditures. Number two, we want a better understanding as to some of Google's major businesses. YouTube comes to mind. More transparency in numbers would be appreciated. And three, and perhaps most importantly, people want an understanding as to whether Google is moving in the direction of capital allocation for buybacks and dividends. If you look at the biggest companies in the S&P 500, Google stands out as one of the few that doesn't have a buyback in place and doesn't pay a dividend.
And you just went right into my next question, which was I wanted to talk to you about the potential of a buyback or a dividend payout. So what are you expecting to hear in terms of that? I mean, and also, are there any other surprises that we could get today?
Well, so I think I would highly doubt the company is going to announce a buyback or a dividend in conjunction with its quarterly results. However, we expect that the company perhaps is going to take, let's say, a more favorable tone when it comes to that topic, at least as perceived by the investing public. And I think the company is going to move in that direction. Look, they have, I think, $65 billion in cash and investments as of the end of Q1. I expect that number to increase for Q2. They have the resources to make those types of things happen. In terms of other surprises, I think it's fair to say that Google really is a company that over the last couple of years, surprising to some, hasn't consistently exceeded analyst estimates when it comes to revenues and earnings. I wouldn't be surprised if we saw another miss on one of those two line items, and that's because the company doesn't provide guidance. I wonder to what extent they might provide more information to enable the investing public to gauge how the company is doing going forward.
Yeah, and in light of that, I mean, it's a good point. In light of that, we've seen shares of Google suffer because of that. So in light of that, just to finish up this interview, where do you stand in terms of estimates going into earnings results this afternoon, and where do you stand in terms of the stock? Do you like the stock?
Yeah, so we have a strong buy opinion on the shares. We cover the Class A shares of Google, GOOGL. Our 12-month target price is $650. That implies about 10% upside roughly. And interestingly, that's exactly how much the stock has risen year to date. So as much as there have been questions and concerns about the company and the stock, Google shares have actually performed quite well, notwithstanding the fact that people look at peers like Amazon and Apple and Facebook and see those stocks performing even better, but look to the market more broadly or a name like Microsoft and you've been better off in Google.
Certainly. Well, Scott Kessler, thanks for joining us today. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.